Hello, everyone. Hi, how are you? Welcome back to another Friday with me, Michelle Green, and your credit and financial tips. Listen, if you are joining us for the first time, we are a credit repair industry. We have a credit repair business and other businesses as well. But what we do here on every Friday from 12:30 to 1 is talk about credit and financial tips so that you can be educated on how to handle your money, how to handle your finances, how to handle your credit. Okay. So, what we're going to do is we're going to jump into today's message. But before we do, I want to give a shout out to CTR Media Network that allows us to stream to billions and billions of people over 140 countries. That's right, we are everywhere. So thank you, and a shout out to CTR Media Network. Go on over to their website, www.ctrmedia. If you are interested in also streaming your business or just as an individual wanting to start a podcast, go on over to them and get started, okay? Stop wasting time, all right? But anywho, we are here today to talk about credit, and we're here to talk about money and how to get our credit history together today. As always, we talk about first what is credit because we don't want it to be any type of confusion around what credit actually is. So, what is credit? When we think about credit as a person that's starting out in the world at the very beginning of, at the end of high school, the beginning of college, when we think about a person who is maybe they've been in the industry of finances and credit for a long time, but maybe they're afraid of credit. If that's you, then listen, credit is very simple and easy to understand. Credit is simply the ability for you to be able to make a large purchase on something that you don't have enough money for today. So, as you are working and earning a living, growing and accruing money, setting it aside, saving it so that you can buy what it is that you want, such as a house, a car, or if you need some clothes, some shoes, if you just need the regular basic necessities, then if you don't have enough money today, then you can actually utilize credit so that you can gain that credit for a short period of time, preferably not too long, unless it's a mortgage or something that has a larger amount of debt attached to it. And then you'll be able to position yourself to pay it off over time. So that's what credit actually is. And today we are going to talk about how long are you supposed to have a credit history? So let's get into it and let's talk about how we can make our financial portfolios a lot better than they are today. So, first off, I want to acknowledge that when we are thinking about the credit history, we must first know that credit is set up in five different categories. So, the first category that we know that credit is set up in, and especially as it relates to our credit score. So our credit scores are set up in the category of outstanding debt. So how much debt do you owe altogether? If you had to take an inventory of everything that you had to pay off on your credit report, then whatever that total is would be the total amount of outstanding debt altogether that you will have to pay off. And another way to calculate outstanding debt is also to look at how much debt do you pay out per month in the actual items that you have already as a fixed amount of money that you're paying every single 30 days. So, outstanding debt can be the monthly amount or it can be the total payoff amount, which is your final balance after if you had enough money to pay off every single debt on your credit. All right, so that's one equation of a credit score. The second equation of a credit score is the payment history. The payment history is, of course, being able to make your payments on time. That is one of the biggest issues around the credit score as to the reason why most people fail in the credit industry. So we want to make sure that we are paying our debts on time, and that does accrue about 35% of your credit score. Then we look at the credit history. So these first three components of your credit score actually is a majority of the points that are calculated for your credit. And we look at credit history as the ability to show whether or not you have an open or closed account, or the history of time that you have had an account open on your credit. That's basically what credit history is: the history of every single account that you have had since you established your very original, your very first account with your credit. All right, so the credit history we'll get into in just a minute about what exactly that is and how we can manage it better so that we can win at this credit game. Now, we also have a part of the score equation is the ability to establish new lines of credit. So 10% of our credit score is calculated by the different types of credit that you are established, and another 10% is based on the new credit that you are establishing. So when we look at the full 5 components of a credit score, we're looking at outstanding debt, payment history, credit history, the types of credit that you establish, and the new credit that you establish, which means do you have any recent credit that you have put on your credit report that you have recently applied for to see if you can get approved, and hopefully you were approved and not denied. So we're talking about today, out of the 3 major components, because outstanding debt is about 30%, then we got 35% of our payment history. Credit history is going to be around 20% of our score equation. So it's very important that we understand these first 3 components of a credit score, and that we understand that the credit history matters of how long we have had an account open or closed. So first off, we need to know that having an account open is really going to benefit your credit score. So that means that we should not be closing our accounts. We should not be telling the creditor that we no longer want to have an account established, regardless of the circumstances around whether you're paying a high interest rate or you're paying additional finance charges or some type of additional fees to have the account, because maybe it was a starter account. So you don't want to just close accounts on your credit unless you have something that is going to replace the credit history with something that you're adding that's going to be a duplicate of what you are closing. So let's establish first that if you have credit history, the history of the account should be open. So your score is going to calculate only the accounts that are open, and that's going to give you a point towards, or several points rather, towards the fact that you've had the account open and it's active and is showing some type of activity. So we don't want to close any accounts so that we can have a good credit history. Now, when we think about the credit history timeline, the timeline actually is for 2 years. So we're talking 24 months that we should have the account established. 24 months is the history timeline of when the account should be open and showing some type of activity at minimum. So that means that the accounts that we have established where we're paying them off in 6 months to a year are not accounts that will show a good credit history, which means that in essence, we should not be establishing anything that is not going to give us a credit history of a minimum of 2 years. Now, you can have an account that is open longer than 2 years. You can have an account such as a vehicle loan or a personal loan or even a mortgage or even your credit cards. From the date that you originally established it, it could have been 10 years ago, 5 years ago, it could have been 2 years ago, but at minimum, you want your credit history to at least track a timeline of 2 years, 24 months, not 12 months, 24 months ago. So when we think about putting the lines of credit on our credit reports, make sure that we understand that if it's an old account, that we understand it's giving us more credit points because we've had the account open for a minimum of 2 years. So even if you have a brand new account and you haven't actually, gone through paying the bill or the debt on time for just maybe 2 or 3 months, it's okay as long as the account terms are financed for a minimum of 2 years or longer. So make sure that when you are thinking about getting some new credit, that you're looking at the history of the credit. So what is the mindset that we need to walk away from with the credit history is to keep in mind that we have to have it for at least 2 years. We cannot walk around with these accounts that are being established in just a short period of time and assuming that we are going to still remain in good standing with our credit lines. So, one of the things that we also want to talk about is the history of the credit. When we think about getting denied, why are we getting denied for credit? It could be the simple reason that we have too many accounts that are still showing that we have an obligation to pay over an extended period of time, such as longer than 2 years. So it is good that we have the accounts that are established for a minimum of 24 months. However, if we have too many accounts that are set up to show that we have 30 years, 15 years, 10 years, or maybe even 5+ years that the account has to wait before it's paid off, then the lenders, the creditors, usually will not want to move forward with any new line of credit, especially for those of us who are looking to purchase a house. We want to understand that we can't have too many accounts that are at a point where we're going to extend ourselves over a long period of time of being able to pay off the debt. So let me explain it in a different way. In other words, if you're looking to purchase a home or something that requires a large loan amount, say 25 to $50,000 and up. So if you're looking to purchase a large loan for whatever reason, a mortgage, a car, or any other type of personal loan for maybe repairs or whatever, then we got to understand that if we already are obligated to several different companies to pay off all of these other companies that we haven't actually gotten even close to paying off yet, because maybe we have a lot of interest accrued, even if we've had the accounts open for longer than 2 years, then the lenders may be looking at the fact that it's going to take you too long to get the balances down. So that could be the very reason as to why you are not getting approved for another loan amount of $25,000, $50,000, $100,000 or more. Because the lenders look at it from this angle. Are you able to show that the money that you have borrowed, that you can pay it back quickly? Or can you pay it back over a period of time of 2 to 5 or even 10 years, even if you are financed for 30 years or longer? So that is the perspective of the lender. What they want to see is not that you are paying or accruing so much interest at the beginning of your loans, but they want to see that you are able to pay down the loan over a period of time that is pretty reasonable. So let's say you got $100,000 in debt. That's a balance left on the credit report. And you got this $100,000 and you want to show a lender that even though you got $100,000 total to pay off, you want to show the lender that you can actually break up your payments in such a way that you can pay the principal balance down to maybe $50,000. So even if you have multiple debts on your credit and all of your balances are high, I want you to begin to think about the history of your credit should be showing that the first couple of years, we all know that that's majority of interest. What is interest? If you borrowed $100,000, you're probably going to pay back around 150 to 200,000 because there has to be some type of incentive for the lender to give you the money in the first place. You don't just get to borrow what it is that you need to borrow. It has to be a reason why the lender would want to give you the money in the first place. So they have to get a cut out of the deal, and that's called interest. So they don't want to just see as a lender that you have $100,000 in debt. They want to see how quickly can you pay that debt down, but giving it a timeline of a minimum of 2 years or longer, but not too long. So if you're financed for, let's say, 7 years or 15, 30 years, especially when it relates to a mortgage, then you want to focus on paying down the principal balance. And you want to pay down that principal balance to show proof that you can handle a new line of credit and you can keep that line of credit open a minimum of 2 years or longer. So it's just that when we think about debt, when we think about the lender's perspective, we're looking at it from the angle of the lender wants to be able to trust that you can pay them back. And you can pay them back in a decent amount of time where you're not like really focused on just paying the bare minimum. You're not focused on just deciding that, hey, I'm going to pay this, but I'm going to pay it just whatever they have requested under the terms and conditions. So we got to think about what this history is really doing for us as it relates to our credit history. So how long should we have an account? A minimum of 2 to 5 years. And if we have an account that's like a mortgage or a larger loan that's going to take us longer to pay it off, we just want to show good faith that we can actually pay down the debt over, let's say, 5 to 10 years or even 15 to 20 years, but not to necessarily have the debt lingering around forever with multiple accounts showing these high balance amounts. So that could very well be the reason why you are being denied for credit. So we don't want to close accounts. We want to make sure we keep the accounts open for the proper timeline of a minimum of 24 months. And we also want to pay our debts on time, but we want to pay them down to the degree that we can still show we can handle having the history of 2 years or longer, but we can also show that we're not in too much debt with too many high balances that we don't have the ability to pay off. Okay, so when we think about that, we just want to understand that credit history does matter. So when we think about credit history, we want to just realize that the history of whatever account we have on our credit, even if it's a credit card, what is the history of us paying our credit card down, and what is the history of us charging the credit card back up? So going up and down with the credit history is a part of the equation of also looking at the credit history. How well can you show proof to the lender that you really don't need their money, that you can pay off the balances, and that you can manage keeping up with the debt over a period of time? See, that totally makes sense now. I know it does. I know it does. You have to prove to the lender that you can handle whatever it is that you have agreed to in the past and in the present moment, as well as to be able to get things in the future. But your past and your present is going to determine how well you will be trusted with credit history in the future. So that's why it's so important for us to make sure that we're just not doing something to just pay the bare minimum. We got to pay our debts. We have to have a mindset to pay our debts down. We want to be close to being able to pay off debt before we decide to get another line of debt that is going to be equal to the same amount of debt that we originally borrowed. So if you are refinancing a vehicle, If you are deciding that you want to sell a house, then you want to make sure that you are almost paid off before you decide to go to another lender, because they're going to be looking at the history of how well you paid and what is the balance right now of the debt that you owe. Okay, so we want to think about that credit history a little bit deeper than just the bare minimum amount. So when we talk about credit history, we also want to talk a little bit about charge offs and collection accounts. So the history of a charge off literally means that after you have allowed 6 months to pass, that you're not actually able to save your credit account that you originally started out with, the original creditor. And when it goes into a charge off, write off status, that history of how many times you were late is going to begin to report to the credit bureaus. And guess what the credit bureaus are going to say? They're going to say you were late. So it's not just about the payment history, but it's also about the history of how long you've had the account and how many times during the 2 years, during the 5 years, during the 20 years, during the 30 plus years, have you shown proof that you could handle the payment. And then when it goes to charge off after 6 months of consecutive not paying the payment, then the lenders, the creditors are looking at it from the angle of, I don't really want to do business with them, because now you have too many history components that show you're not actually able to manage your credit over time. You're not actually able to manage your credit when you have credit history where it's showing that, hey, I didn't make the payment. I allow all of these different accounts to charge off. I allow all of these other accounts, not just to charge off, but to go into a collection status. And so they're looking at the timeline from when the account was originally established with the first company. How long did it take before the account went into a charge off status? We know it takes 6 months, but how many times within that timeline did you choose to not make the payment is something that they're looking at with credit history. And then in addition to that, if the account ends up in collection, when did the collection hit the credit? How long did it take before the account ended up from a charge off status and then move into a separate account on your credit to end up in a collection status? So if we look at the timeline, the credit history of every single account that's on our credit report, then we will begin to understand why the lenders are denying us for credit, because we are not showing good history of how well we do, how well we manage the money that we have right now to pay the debts down, or to actually do well by paying off the debt that we have charged off or in collection. They are looking at how long it takes you. So the history matters, and it matters quite a bit. 20% of your score is based on that equation. So we cannot just walk into credit and think, I'm just here to just get an account. I'm going to not worry about how long it's going to take me to pay it off. I'm not going to be concerned about what my balance is. I'm just going to do the bare minimum. I'm not going to go over and beyond. And I'm just going to allow my credit to just be whatever it is. We cannot take on those kind of attitudes as it relates to credit history or to credit in general, because that is the reason why our credit is not where it needs to be, and why we fail at the credit game every single time. So credit history is so important. How long does it take for you to pay off your debt? Number one. Number two, if an account does go into a charge off, how long does it take for that account to go to charge off? How many years did you have the account before you decided to just give up on it altogether? Did you know that if you decided to not allow an account to go into charge off, that you literally take the account from the risk of being charged off by making a partial payment, and it'll put you back in good standing, which means that you would save yourself 75 points with a credit history to show that, hey, I am a faithful person. I will pay my debts over the proper timeline to pay it off even early, or I will pay it off in the timeline that it is financed for. And then the third thing is to look out for how long does it take before a collection hits your credit, a repossession, or a foreclosure? How long does it take for those to actually get on your credit? And what is the date that the creditor put on the credit report from when you originally went into charge off or went into collections? Because sometimes those dates don't match as to when it hits your credit versus the time that the original creditor sent it to the collection agency. Those could be two different timelines. It could be two different dates. So what the lender is viewing is how long it takes you to pay off your debt, how long it takes you before a charge off hits your credit, and how long it takes for you to go into collections. So it's so many components to credit that we want to understand. And if we can understand and gain the proper knowledge for our credit, then we can have a great portfolio with credit and with our finances. So it's not just about making our payments on time, it's about the process of the timeline that it takes for the credit to appear in the actual files with Equifax, Experian, TransUnion, and Innovis, and any other type of reporting that tracks what you're doing with your money and with your credit. All right, if you've learned something today, I hope that you will make a comment below. Go ahead and tell me what it is that you learned, something that you didn't know that you are learning right here on the KBCR TV show. We want to hear from you so that we can engage with you and help you even further, specifically for your particular credit. If you are not in the Kingdom Builders Credit Repair Program, get into the program by going to our website. It's www.kingdombuilderscreditrepair.com, or you can also call us at 844-522-7552 or email us at info@kbcrllc.com. Also, make sure that you are subscribed to our channel. Stop dating us. Go ahead and marry in, lock in, commit to this channel, and tell a friend, a family member, someone that you know that may be struggling with money or credit, finances in any way. Did you know that I've been a financial advisor for over 30 years? So this isn't my first rodeo, okay? This is something that I've been doing my entire life, and I love to do. I love to teach people about how to manage their money, their finances, their credit, and even their business. So we can talk about business credit at another time, but today we just want you to understand how the whole credit history equation works as it relates to your credit score, as it relates to your credit profiles, as it relates to your accounts. Everything matters. So also, I forgot to tell y'all, when it comes to the profile, you have to make sure that you keep up with the timeline of your income. So wherever you work, make sure that you have the history of how long you've been working there, because they do track the data that is on your profile and how often you move and how often you change jobs, how often you change phone numbers, and how often you change your name is also a part of the credit history. So thank you guys for watching. Make sure that you're subscribed, set your notifications for every Friday as we come on to share these important credit and financial tips with me, Michelle Green, every Friday. Thank you so much for watching, and we'll see you next week. Bye-bye.
At Kingdom Builders Credit Repair, you are more than a customer. You are a partner in your credit repair journey. We offer one-on-one guidance in a warm and friendly atmosphere. Kingdom Builders Credit Repair, empowering people to have financial dominion on purpose. Visit us online at www.kingdombuilderscreditrepair.com.
1320 Main Street, Suite 300, Columbia, South Carolina, 29201. Call 844-KBCR LLC. 844-KBCR LLC.